It's Brian Shannon speaking from AlphaTrends.net. Today's Friday, the 23rd of February 2018, and the markets had a really good week here. Just bounced back incredibly as the all the markets are pretty much year to date positive except for the bonds, and this week really helped with that. So let's close that down and take a look at the charts. Here's the weekly time frame for the S&P 500, and we're still in a longer term uptrend. We've seen that since this market, had its most recent break higher in 16, that we've tested that rising 200-day moving average or 40-week moving average, and the trend has continued to move higher. So looking at the daily time frame, we're back above the year-to-date volume weighted average price. That's important. It's also important, I think, that we're back above that rising 50-day moving average. So the market remains, it was very frightful a couple weeks ago as we got down to that 200-day moving average, but the recovery has really been amazing here. Let's take a look at these are some of the key levels that we've been focused on. Let's take a look at the 65-minute time frame because we had, of course, the year-to-date VWAP, and this week we found that the pullbacks were supported by the volume-weighted average price from the highest point that people have ever traded. So the average price since the peak, we are above. We also are well above the volume-weighted average price from this pullback and from that recovery and from the pullback low. So from the low, where it touched the 200-day moving average, that volume-weighted average price is about 268.5, meaning that the average participant from that time has paid 268.5, and you could also look at it as the average short since that time who's been looking for a retest and a breakdown is now losing money to the tune of about 6.5 points. So impressive rally. Breaking it back down to a 30-minute time frame, we can see that this 5-day moving average did not decline at all this week, and here we are. We've got a little bit of a band of resistance right in here. I think for next week, if we could maybe pull back to that 5-day moving average, make a higher low, and then get going, that would be good to see. And perhaps this market is headed back up towards the all-time highs. For the NASDAQ, we've only closed above this level on about 6 or 7 occasions, and that was all just in a few days of this year. So these are the only days that it has closed higher than where we currently are. The year-to-date volume-weighted average price, let's just put that back on there, comes in well below down at the 10-day moving average. And looking to a 65-minute time frame, the volume-weighted average price from the low is well below us down at 162. So what that tells me is that we've got room, basically, that if this market, pulls back, that you would be expecting to find buyers to support this market. So again, the buyers, you cannot argue with the direction of the 5-day moving average. And for the NASDAQ, it's been rising in here. We had the possibility that it would fail over in here and make lower highs and lower lows, but instead the buyers have gained control here and have maintained that control. We saw that support was found at about 164.5, so next week that will continue to be an important level. If we break below that, that'll turn things a little bit more cautious. By the way, we're also going to talk about gold and Bitcoin after I get through these equity indexes. But the trend in the intermediate term is higher, and people try to put labels on the market. It's a bull market, it's a bear market. It depends on your time frame. Right now, we're in a bullish environment for stocks. It's easier for stocks to move higher right now, and that's what matters. Is each day, can you go in and find a new opportunity and manage risk? I would hate to be an investor. Thank God I'm a trader, because I certainly don't have the ability to get through these declines and think that things are going to be okay. I'd rather be short or even just cash in the sidelines as it turns lower like that and wait for the dust to settle, because you don't have to pick the bottom to be able to make money. And the Russell 2000 has been a little bit of a laggard, overall, and but it's acting better. The year-to-date volume-weighted average price for this market, we did close back above. We're right at that 50-day moving average. It's kind of been finding some sellers this week. So I think that when you look at the Russell 2000, it's a little bit more indecisive. What I'd really like to see here for the buyers to regain some control would be maybe a push up, even right through that, then a pullback, and then for it to rebuild and gain some momentum. For the semiconductors, obviously has been the strong group for the last several years, and we still are above the rising 10, 20, 30, 40 week moving average. And, we get these big price shocks, but the primary trend remains higher. So in this market, it's still pretty volatile. But if you break it down to a shorter term time frame, such as the 30-minute time frame, each one of these candles representing 30 minutes, and then we get this 65 period being 5 days, then what we're looking at is we've still got a rising 5-day moving average. And as I pointed out to subscribers, we had a pattern of higher highs and higher lows above that rising 5-day moving average, and then we saw lower highs and lower lows, but we did not get short because the 5-day moving average was still advancing. That kept us from getting short. What it would take to get short would be for something like this to happen, and that 5-day moving average would have then flattened out, and then we could short in here with a stop above that flat to declining 5-day moving average. That did not happen, so there's no reason to be short unless, of course, you're a very short-term scalper. The biotechs are improving here. They did close above the 50-day moving average. Their year-to-date volume-weighted average price right now, we're stuck just below it, and we're also below that declining 20-day moving average. I think, though, that this market, the biotechs that is building energy for a break higher. So the volume-weighted average price off the peak, we're back above that. We're well above the volume weighted average price from the low, and you can see that buyers came in and rescued it there. So that's a very positive development. We have a little bit of a band of what's been resistance here the last week, just up above in this area. So, if the market were to break right through that, I think it would be chasing. So I'd rather see it maybe break through that, pull back, test the 5-day moving average, and then to be able to make a purchase somewhere over in here, and then you would raise your stop underneath whatever the higher low would be. So that's obviously, a scenario. It's not a blueprint. Hopefully it's a blueprint, because that's the way it would make most sense to me to trade it. But our job is to anticipate all potential scenarios and wait for price confirmation on the time frame that we trade before we actually put our money at risk and participate in that trade. I've been talking about, let's talk about gold for a moment, because I wrote an article for Yahoo Finance about that. And what I was saying in there is it really needs to break beyond this 1380-ish level for the buyers to really gain control. If we take a look at the daily time frame, never mind that moving average for now, but what we're seeing is, we made a rally, we pulled back, we're just kind of building energy underneath that area. We have a rising 200-day moving average right there. And the more times that resistance is tested, the more likely it is to fail. And we see that these higher lows are indicating the buyers are getting more aggressive time-wise, as well as price-wise. Price-wise with the higher lows, and time-wise as the test of resistance become more frequent. Let's take a look at Bitcoin. This is a chart here with what I have on here at this point up in here is the volume weighted average price from 2018. That's that orange line right there, and I didn't mean to draw it like that. But that Bitcoin in there, you can see I'm trying to look for the drawing tool, and here we go. So up in here, we're anchored from that point. The red one is the volume weighted average price from the peak. So since the highest price that anyone's paid for Bitcoin, you saw that this most recent rally from the 6,000 level found resistance there almost to the penny. That's approximately the 50-day moving average as well. I don't have that on this chart. But what we're looking at now is the low down at 6,000. We've seen a real nice rally right up to the year-to-date, the volume-weighted average price from the peak, and now it's in pullback mode. And I'm thinking, and in fact have bids down in this area, down near the volume-weighted average price from the low. So, overall, Bitcoin is still, it's below a declining 50-day moving average, but for a portion of our Bitcoin trading at Alpha Trends, what we try to do is to buy buy some on deep pullbacks at a sensible place. So, approximately 50% retracement and the volume weighted average price from that low is where we're looking to do that. I hope that you guys had a good week. Well, let's take a look at it. So here's it. I just wanted to make it a little bit clearer. Here's each one of these is 2 hours. So you can see we're below a declining 5-day moving average, and we have a pattern right now in here of lower highs and lower lows. So as we see, that was the peak at the year-to-date, the volume-weighted average price from the peak. We made a low, we made a lower high, another lower low, another lower low, and another lower high. So if we can come down into here, we're looking to buy some, most likely for a bounce. But either way, the way that Bitcoin bounces can be real nice moves. So that'll do it. Hope you had a good week of trading. I'll talk to you next week. Thank you.